What is going on, guys? Nick here, back with another video. Micron Technologies has had a wild ride of a year. Trading as high as $95 in April, before dropping to as low as $65 by October, and then all of a sudden shooting back up to $80 per share over the past month. But the big question is, will Micron stock keep rising? So in this video, I'm going to cover exactly what Micron Technologies is, why the stock is so up and down, and what the stock is worth. So let's start with what is Micron Technologies. Well, in their words, Micron designs, develops, and manufactures industry-leading memory and storage products, which basically means that they make a lot of RAM and flash memory storage products. Their chips are used in all sorts of innovative and important technology, like AI, 5G, data centers, and business and personal devices. They also fabricate their own semiconductors in 12 manufacturing sites and 14 customer labs across the globe. So let's take a look at what's been going on with the company. So between 2017 and 2018, Micron had an insane rise in revenue and earnings, growing from $20 billion in revenue and $5 billion in profits to $30 billion in revenue and $14 billion in profits the following year. But in 2019, the memory chip supply had been building much faster than demand, and we all know the Econ 101, when supply passes demand, prices have to fall. Well, this is exactly what happened to Micron, and it really hurt them. The revenue went from $30 billion in 2018 to $23 billion by the following year, dropping 23%. The oversupply was so bad that even by 2020, Micron's revenue still hadn't recovered, with the revenue dropping to just $21 billion, now 30% lower than 2018. But by the end of 2020, Micron's stock started to rise. It seemed like the massive oversupply they had spent the past 2 years working through was finally coming to an end. There was now hope that the improved market would bring Micron higher prices and profitability through 2021. By the second quarter earnings release in February 2021, the stock had doubled from its 2020 lows and was now sitting in the mid-90s. The stock had shown a 30% revenue increase from the previous year, and the earlier prediction that the semiconductor market conditions would improve seemed true. But there was some criticism about Micron's strategy. Micron was pushed to defending not investing more into their manufacturing business and taking advantage of the semiconductor shortage. But Micron responded saying it was important to remain disciplined in regards to their spending, that they were already spending $9 billion during the 2021 calendar year. Semiconductor facilities take years to build and are incredibly expensive, costing billions. When global demand changes, Micron doesn't want to experience 2019 and 2020 all over again and have to work through a massive oversupply after investing billions in a new factory. However, by April, there were rumors floating around that Micron might be interested in buying Kioxia for around $30 billion. Kioxia makes NAND flash memory chips used in mobile and computer servers. After the shift to remote work and businesses migrating to the cloud, these two areas have seen a huge boost in demand. So at this point, even with all of the positive news and improved market conditions, Micron's stock started to slide. By midsummer, analysts were expecting a decrease in memory chip demand, as working from home was expected to decline, which could drive down demand and prices for DRAM. When the earnings release came out at the end of June, Micron beat estimates with $1.88 earnings per share and $7.42 billion in revenue, compared with the expected $1.72 earnings per share and $7.24 billion in revenue. Revenue was up 36% from the same quarter the year before, and they even put out higher guidance numbers than analysts expected for the fourth quarter. Micron was seeing increased selling prices for their chips. DRAM prices had increased by 20%, which improved their gross margins. They believe that now the semiconductor shortage could last into the 2022 calendar year, and that even when the supply shortage is resolved, Micron expects demand will continue to rise. But analysts didn't agree, and the stock continued to fall. One analyst explained that they see a weak environment for the upcoming global chip memory sector, particularly with DRAM, where the majority of Micron's revenue comes from. And 3 months later, in September, Micron reported its fourth quarter earnings results. While the results were very strong, they earned $2.34 per share, and revenue was up to $8.27 billion, which is 37% higher from the previous year. Micron's guidance for the first quarter came in much lower than expected. They saw $7.65 billion in revenue and expected to earn about $2 per share. The sell-off that occurred after the slump sent Micron to its lows for the year, hitting $65 by mid-October. But this is where things started to turn around. Their CEO, Sanjay Mehrotra, was very optimistic about 2022, forecasting record record revenue and solid profitability for the year. This would mean beating the $30.39 billion they earned in 2018, up from the $27.7 billion they've earned this year. Micron put out another vote of confidence by announcing they intended to invest more than $150 billion over the next decade in memory manufacturing and research and development. By December, the whole semiconductor sector rose after positive news came out from the other chip makers. There seemed to be growing optimism that supply is still low and demand is still high for their products. This should keep Micron from being again hit by the 2019 memory chip oversupply. Okay, so now that we understand what's going on with Micron's business, let's take a look at how it's performing. So starting as we always with the last 10 years of revenue and net income, we can see how Micron has experienced a lot of booms and busts. It looks like in 2014 they saw a peak, followed by a pretty serious downtrend where they actually lost money in 2016. But we can see the surge in 2018, followed by another slump over the next 2 years. But 2021 saw a decent rebound, with revenues climbing in at $27.7 billion and just under $6 billion in profits. When we look at the revenue versus expenses, we can see the impacts of their changing supply and demand that Micron has experienced. While 2018 reported their highest amount of revenue over the last 4 years, their expenses were the lowest, including the cost of revenue, which are the costs from producing their chips. Micron has continued to steadily increase production, and we can see how revenue has recovered since the oversupply. Now, Micron breaks its business down into 4 segments: the compute and networking business unit, which are the cloud and business memory chips; the mobile business unit, which is their smartphone memory chips; the storage business unit, which are their solid-state hard drives for business and cloud customers; and their embedded business unit, which are the memory and storage products for automotive and industrial markets. When we look at their segments by revenue and profits from each, we can see the compute and networking business is where a lot of their major volatility comes from. The segment went from $15 billion in revenue and $10 billion in profits in 2018 to $9 billion in revenue and $2 billion in profits by 2020. And even when we scale up the other segments, it does seem like each was impacted by the chip oversupply in 2019 and 2020, but all 4 have shown some increase during 2021. Okay, so now that we understand how the business is performing financially, let's take a look at what the stock is worth. So right now, Micron is forecasted to continue its growth out to 2024, but profits are expected to flatten out between 2023 and 2024 to around $38 billion in revenue and $12 billion in profits. When we look at the revenue growth, we see a pretty rapid decline, dropping to just 4% by 2024 after being forecasted to show 16 and 15% growth in the years before. I think looking at this chart, the appropriate growth rate range for them is about 8 to 12% growth. This prices in a lot of the volatility that's happened in the market, and a growth rate of 8% comes out to a fair PE value of 19, and a growth rate of 12% comes out to a fair PE value of 27. Historically, the stock has traded between a really wide PE range, hitting a low of 3 at its peak in 2018 and as high as 32 earlier this year. So looking at the forecasted earnings times the fair PE values, showing us the estimated future valuations for Micron, we can see the stock is extremely cheap relative to the current forecasts. At today's price of $81, if the 2024 forecasts are true, the stock is trading at a forward PE ratio of about 7.5. And using my fair PE values, the stock has a potential upside of 205 or 150% for the bottom end valuation, and for the high end range, 292 or 257% upside. So while Micron's stock is pretty cheap compared to its trailing earnings, the stock has been a roller coaster for a reason. The memory chip business has experienced a lot of boom and bust cycles, and we do need to consider this when looking at the stock. However, I do think that the global chip shortage does help Micron's stock by keeping supply low, especially while there's high demand right now. And to me, it seems very likely that Micron is about to break the pattern that we've been seeing and sustain its increased price. While I do expect 2022 will be a good year for Micron, it's a little harder to project just a year farther out, all the way out to 2023. I do think the company is in good shape if things start to turn negative by 2023, because even when you go back to the bad times between 2019 and 2020, the company was still turning a profit. So if you can hold on through the tough times, there is a ton of upside on the stock. Now, the only reason that I don't plan to build a large position on this company is I just don't really want to have to deal with these wild swings that happen with the stock. Now, I do think that they have a ton of upside, so if you can handle that, there is a lot of reward to be had. Now, if you guys look over in this corner right here, I have a great video for you next. And as always, thanks for watching.